right, I'm pretty busy at work, so I gotta make this really quick. Now, yesterday I said that I think we're in a rising wedge, and that today we actually might see a push higher, another high, which I think we did get. I spent the day trying to enter into some put positions, which are actually red right now, and I'm gonna hold. I know everyone and their dog is like super bullish, and I'm bullish too. I am waiting for that big push up, but I just think that it's not time, just not quite yet. Almost, but not quite. So let's go ahead and look at the charts really quickly. I'm gonna start on the AMC hourly instead of the daily chart, because this is the rising wedge I'm referring to. It's a pretty tight narrowing pattern where the price is pushing higher on like wish-washy volume. Like, this is not the volume that is going to send the price soaring higher. It's really not. I also don't think that the MACD looks super great. We are approaching what's probably a new lower high in the MACD. We're going to have the long period, that blue line, cross over this yellow line tomorrow. That's what I'm looking for there. I don't pull up the MACD very often, the MACD. It's just at times like these when I think the momentum is about to shift, it's a pretty good idea. You can see on the hourly too. Let me pull this up a little bit. Let me just show some stuff here really quickly. You can see that the histogram isn't setting new highs. The price is starting to float higher, so there might be some divergence there between the histogram and the price, and that could correct and cause that crossover from the long and short term EMAs and the MACD. I'm thinking that volume itself actually doesn't look that great either, and that there's a bearish divergence between this candle and, well, this candle here. So that would suggest that the price could very well be pushed lower. Now, this is the thing about divergences. Typically, they occur before big runs, and it can be big runs up or big runs down. It just depends whether or not that divergence plays out bullishly or bearishly. It's like not indication of necessarily the direction, but of the amplitude of the next move. So if the price does move higher, I'm serious, it's got like a $3 range, plus or minus on either side. So if it goes higher, it's probably going to go to 20, and if it goes lower, it's probably going to 14, or near thereabouts, right? I haven't done any target analysis on this wedge, but I would suspect that we're going to find ourselves closer to 15 towards the end of the week. That's what Exoplanetary's analysis of the options chain suggests. It's not max pain, but it's close to max pain, but it's not quite max pain, and that's got a $14.50, $15 price target down there on that options chain. That'd be a big drop, and I actually think that's what's going to happen. So that's what I'm looking at AMC, and that's why I have the hourly chart pulled up with the after hours pulled up too, because I think the after hours actually kind of helps connect some of these dots, because there has been some gapping. I'm going to go ahead and look at the daily charts really quickly. Let's see here. Charts. Show me charts. Lots of green today. Lots of green. SPY pushing higher, and we did get a close above that 393 level, and IWM actually closed above 179, and these are the two critical levels I've been saying that we need to close above. I think that I had these levels a little lower before, but I'm thinking this is a more appropriate level. It's very possible that if we get a bullish continuation from here, we're actually going to go up and we're going to test the downtrends that started earlier this year, and that'd be a nice little bullish push. And would that be the everything rally? I don't know yet. I won't be ready to say whether or not the everything rally has begun until the end of the week. So I'm going to wait, because it's very possible we're about to get an absolute rug pull, just like out of nowhere. I just that's what my gut's telling me, American Eagle Outfitter making a huge push higher, and this is great. On this red candle, I sold an 1150 put. So that is to say that I sold a contract. I got cash for that. I didn't buy the put long. I sold it short, which is bullish. And I took that cash and I put it into I put just a little bit of it into a $13 call that expires this week, because, well, that's where the next major resistance is. And I think that, and that AEO can push up that high. It can. I don't really expect that contract to expire in the money, but American Eagle Outfitters is another stock with incredible short interest, but this company is profitable and they pay dividends, which is something that is attractive to me. I know some people don't like that, but to me, I like that a lot. AMC did push higher today, closing above yesterday's open, ultimately though failing to set a new high. I think that's the real takeaways. AMC didn't set a new high. Yesterday, I identified this rising wedge, and I said we're probably going to, see a little more push. We might see this little high come in, and we did. And it's like, well, I don't think our daily volume was all that high either. Let's open this up a little bit. So you can see that the daily volume is above the 30-period average, sure, but also it's in a downtrend. IV is coming down too. Look at that. So these are my two big indicators: volume and implied volatility. The RSI is in a very interesting spot. It's actually right at 70, right? Let's 69.32. So it's just up at 70. And this is where I say the RSI doesn't matter. What matters is how the price interacts with these levels. So in a corrective bounce that fails to establish a new motive wave higher and that reverses downward, would very likely reverse on that 70 line. So tomorrow is a signal day. So that's what I'm looking for today. Going into tomorrow, big signal day, big red or big green. I'm thinking big red. Rug pull incoming. If not, I'm gonna get burned, and that's fine. That's fine. My hair looks weird, I know. I haven't showered since yesterday. Okay, happy trading.